Good afternoon, everybody, and a warm welcome to our Nordex Roundtable. I brought with me today Anja Zila, who is the head of investor relations at Nordex, and she will give us some insights into the strategy, recent development, some numbers, of course, and the overall vision of Nordex. You will have an opportunity to ask questions like always at our roundtables. Please feel free to use the chat box on the lower right-hand corner to enter your questions. Also, as a note of relevance, we do cover this company. You will find the research not only on Research Hub, but also with a link that I will put in the chat box in a few moments in case you're interested to read up on it in the aftermath. I wish us all a pleasant presentation and deep insights. And Anja, the floor is all yours.
Thank you, Holger. And also a very warm welcome from my side. It's really a pleasure for me to today present Nordex and our transformation story from not such a profitable company towards now close to achieving our medium-term target of 8% in profitability levels. So today I'm presenting to you who we are, what are the next steps in our transformation story, how did we get there, and hopefully in the end leave you with an impression that Nordex is quite interesting to look at. That's a personal opinion, of course. So let me start. So Nordex, as you might know, is purely focused on onshore wind. Yeah, we strategically chosen this path because of several reasons like balance sheet constraints, risk portfolio. But overall, we are now focused on project turbine installation. So we start from the development towards production, installation, commissioning. That's one segment of the story or of the company. And the other one is service and maintenance. So in total, a company of close to 8 billion in top line. And we are strategically focused on not all markets in the world, but we are selective. So what our markets are is definitely first, it's Europe. Europe as kind of a portfolio because some markets will have a bit stronger demand, a bit softer demand, but overall the trend line should go up. And in Europe, focus, of course, at the moment, we have to talk about Germany, the Nordics, so Scandinavia, Baltic states, Turkey, and then other markets like Spain, Mediterranean, France, also having a solid foundation for growth. Outside of Europe, what we look at is North America. In North America, I have to mention Canada, where we are definitely market leader. And potentially going forward, we also see a market in the US, where we historically had a footprint of 10 to 15% of market share. But now, given that kind of the uncertainty around the US administration has eased, there could be a path for Nordex also to gain market share again in the US. Outside North America, we have production and a footprint in Latin and South America, where I have to say at the moment, demand is a bit weaker, but we believe that at some point the demand could also rebound. And then we are here and there, like in South Africa or in some markets, but they are not the core markets of Nordex. So what do I want to leave with you on this page is that we have been around for 40 years. And actually, I just found out that next year we will have our 25 years anniversary of being stock listed. And I would probably say, yes, they were not easy years, but I would say in the last few years, last 8 quarters, I think Nordex really showed that we are financially and operationally on track. And that actually brings me to the next slide. So on this slide, you can see that Nordex underwent a tremendous transformation. Yeah, so Nordex, besides all the other peers in the industry, had severe challenges after COVID, because this was really a point in time where all things which could go wrong went wrong. And what do I mean with it? It was that, pricing went through the roof. We had a lot of inflationary tendencies. We had a supply chain shock. We were not able to deliver on time. Additionally, we had a cyber incident, right? Everything came together. And those were, very horrible years. And I have to say, Nordex had to tap the markets for, I think, twice, which basically meant that, of course, shareholders, investors were not happy. But then we had a clear path how we can come out of this valley. And since 22, we have significantly improved, our profitability levels, our structures, our terms and conditions. And today it's the year 25. We are now entering, or we have entered this kind of period of growth. So you can see it in our numbers. If you look at the historical numbers in terms of EBITDA margins, cash flow trajectory and development, and you can see now that we deliver what we promise quarter by quarter. So what did we do and what has changed, you might ask? So we are now number one in Europe. In terms of order intake, Nordex is the strongest player in terms of order intake in Europe. So it's Nordex, and then we have Vestas. That's basically more or less kind of the competition we face in Europe. And then in some countries like Germany, we of course have Enercon, but more or less it's quite a good position for us as Nordex. Then globally, we also have quite a significant footprint. And you can see it here on the left-hand side that we are number one, if you exclude China, here in worldwide. In America, I mentioned before, we are rebuilding our position. And at the moment, it's also a two-peer market with Vestas and GEV. But historically, Nordex was always the smallest player, but at least 15-18% market share. And that's what we are working on again. But I would say we can now be quite proud to be number one in Europe and to be number one or number two globally. So what else did we change? We have massively de-risked our business. And I don't want to go into much details, but I can give you some examples. Like we have increased our prices because back in 21, 22, Nordex our offering was not adequately priced, which meant that we took too many risks and we couldn't forward those risks to our customers. So back then, if then things came together, collapse of the supply chain, inflationary tendencies, everything hit our P&L. But we had our lessons learned. So we learned from that. We changed our terms and conditions with the customers. We implemented hedging. We increased prices, and we are now in a much more comfortable situation. Of course, I have to mention that it's not perfect. This industry can't be perfectly hedged against any risks or cost increases. But looking at where we come from and where we are now, there's a significant step up. And kind of this, change in behavior, change in how we close contracts, how we deal with risks. That's what you now also see in the improvement in our financials. And what is the third level to what brought us to this kind of increase in profitability is definitely our supply chain. You see on this slide that Nordex is globally present. We have production in Europe, so in Spain, in Turkey, in Germany, but also beyond. We are more and more diversified into other markets like India, China, Brazil, Latin America. And yes, although this footprint carries some underutilization in terms of the capacity utilization, we like the footprint because what we do is we want to be flexible in case we have another supply chain disruption, or we have geopolitical tensions, which will basically force us, which could have an impact on how you ship, how you produce, how you supply. Yeah. But you see that in order to stay competitive, probably I could say that we are now more and more also producing in a bit lower cost countries. But it's a fine line. What I mean with it is that we do this, but the highest priority is always to keep quality at top levels. Yeah, because in this industry, you need to ensure that quality levels are high and that you're not jeopardizing your quality, your product for the sake of a different supply chain. But so far, touch wood, our data platform, so our main platform we are selling, is doing well, and we don't face major quality topics or hiccups. So I mentioned service at the beginning, and here I'm just giving you one slide where you see that the service business is fantastic. Yeah, it is fantastic in a way that it's roughly 10% of revenues of Nordex. This is driven by an installed fleet of 50 gigawatt, whereas roughly 45 gigawatt is under service. And if you look at service, it's basically it's delivering an annuity-like cash flow stream every year. It's a very long-term business. We have in average now 13 years of service contracts in our books. And this range of service contracts also range up to 25, 30 years. But so every year we have like cash inflow coming in. We also have a very high profitability levels in service. And what do I mean with it? So service can deliver, now we are close to 18-19% of EBIT margins coming in through service, which is great. Yeah. Unfortunately, this business will only grow with the installed fleet. So it's an organic growth path. But when you look at our numbers, you will see that service revenues are expected to grow every year, low double digit. And that's very great because it will more and more take a higher share in the portion of the whole Nordex portfolio. So where do we stand now? I mean, this is a snapshot of our Q2 numbers. And I don't want to go into detail. What I want to show you here is that we are really performing according to what we promised. So our order book now stands at more than 14 billion. This is driven by roughly 9-10 billion from the turbine book, and then around about 5 billion of the service book. And this order book will grow because what we said and what we promised to the market is that this year, so in 25, we will again report hopefully a stronger order intake compared to last year. For reference, last year we had an order intake of 8.3 gigawatts, which was the highest in the Nordex story so far. And this year, we promised that we will outperform this number. So the same goes for profitability. Last year, we ended the year at 4% EBITDA margin. This year, our guidance stands at 5 to 7 percentage points. For the first half of 25, we were already close to 6%. In terms of cash, again, after a positive free cash flow year in 24, we are quite confident that this year should also deliver a strong free cash flow. And what did we say in Q2? It could be that we round about 300 million in free cash flow this year. And then from a strategic perspective, given the footprint, given our strengths in Germany, given our strengths in Canada, the Nordics, Baltic states, we are really well positioned. So that's the current view on where Nordex stands. Here again, it's more like the historical numbers where you can see improvements throughout all KPIs. I mean, net cash, we are net cash positive, 850 million. Working capital ratios are in line. Equity ratio improved. And of course, all the KPIs, the financial P&L KPIs. But what drives our confidence that we are well on track? In the end, I would like to draw your attention to the forecast and the drivers which will hopefully support our story for a long time. So what do I mean with the drivers? I would say here on this slide, you can see that like all the forecast parties like Bloomberg New Energy Finance, Wood Mackenzie, all those third-party agencies who model onshore wind demand are positive. I mean, you can see here that in the markets, Europe, North America, the CAGR, the growth, is expected to continue. And why? I think the underlying demand drivers continue to be, yes, of course, increasing demand because of increasing population, electrification, now data centers, AI, but also more and more repowering, because now we are reaching the life end or the time end of a lot of turbines which have been installed 20, 25 years in the past, and they now need to be repowered to at least keep the minimum level of energy generation we currently have in Europe or in the countries. Then second, I think there's also a political shift, and especially in Europe. I don't know whether you read about it, but with the clean industrial deal, Europe and also Germany came out with, so the defense package, so to say, is that there is a shift that away from renewables only being, needed for realizing the climate change or for minimizing climate change and reaching those targets, it's now a topic of security, defense, independence. With Europe having no fossil fuels, right? How can you make sure that you're not dependent on third parties or third countries? It's only by having an independent electricity and energy generation footprint, and the only way to it are renewables. And the commitment in the Clean Industrial Deal is supporting this, is heading into this direction. And I believe that this is a very well additional driver for future demand and commitment to renewable. And then with wind being one of the cheapest form of energy generation, I think that is the foundation for growth, even if you are a bit, skeptical on every year growth, the underlying factor is given. That's our opinion and our trust into the projection of wind going forward. So what do we forecast? What do we expect for this year? This year, we are believing that there will be a substantial step up again in the EBITDA margin. coming from, 0 in 23, 4% in 24, now 5 to 7%. And again, this should not be the end of the Nordex journey, because we have given out like a clear path to further improve our profitability levels. So our medium-term target stands at 8%. So you could say that we are not far away from 8%, reflecting on our this year's margin targets. And I have to say, I would probably say, what is left from this year to achieve 8%? So it's a recovery in service EBIT margins. We are coming from 14-15% of EBIT margins in the service business. And this year, we already are close to 17. So in the end, in the next 12 months, we believe that our service EBIT margins will return to 18-19% of EBIT levels. So then another lever to achieve 8% is given. The second lever is a stable cost and supply chain basis. And here I would say we are already there. At the moment, cost, supply chain, everything is managed well on track. So that basically leaves volume to be the last driver to achieve 8%. And what do I mean with volume? Volume means order intake. And here I would like to allude you to what I said previously, is that if we are able to secure a very strong order intake as well this year, then volume on the books are given. Then it more depends on the timing of those volumes. And what do I mean with it? Timing is, when do they hit the P&L? Right? So basically, so to say, will it be 26 or will it be 27? So in a nutshell, I believe that, or we believe as Nordex, that it's not a question of whether we will achieve 8%, it's more a question of when. And then I would say, hopefully, once we achieve that, will we then also be able to talk about what's next. Yeah. So when you consider the statements about our positive net cash, our strong margins, the strong net income we should then deliver, a lot of investors are asking us, what about shareholder return? And our CFO mentioned in the second quarter results that yes, we will give you more clarity on shareholder return and capital allocation in our full year results, which are expected to be reported end of February 2026. So yes, then Nordex can be or could be in a position to give you more clarity on how much cash we need to have on the balance sheet to be equipped for headwinds. Could there be dividend, capital increase, not capital increases, sorry, but like share buybacks, right? I'm not alluding you to one or the other, but I'm telling you that we are internally planning for that right now. We are doing the analysis, and I think Nordex can then also give something back to shareholders. Yeah. But then also the question will come up, what is after 8%? But first, let us deliver on 8%. I think let's stay humble. Let's deliver quarter on quarter. Let's promise, perform, and give back something to the market. That's what the current thinking is internally. Yeah, so that brings me to the end of my presentation. So basically, the key messages are Nordex is well on track to deliver on this year's promises, but also on our medium-term target of 8% in EBITDA margins. Second, we are delivering also on a decent and sustainable free cash flow. And I think that's given where Nordex balance sheet and P&L stood 3-4 years ago. I think that's a great success if we are able to show you that the business per se should print and deliver on positive free cash flow going forward. And then finally, in terms of visibility, I think the current point in time, we as Nordex probably have the biggest visibility in terms of, the future P&L and cash flow, given that, Germany is doing fantastic and a lot of our markets give us a high visibility into 26, 27 already. So that leaves me to conclude my presentation. I'm happy now to take your questions and looking forward to them.
Thank you so much, Anja, for the insights. So we do have quite a few questions. Sorry. And let me maybe start out with some questions that are related to what you had already talked about. One of them being repowering, which you see as a growth driver. Could you elaborate on that slightly more, i.e., where do you think we stand in this cycle? What do you see? What do you see coming? What are your expectations? To put a little bit more meat on this very interesting bone.
Yes. So, repowering, we will now mostly see in those countries where you saw already a good level of installations 20 years ago, 25 years ago. And those countries are Germany, Spain, Scandinavia. I would say those markets will first see the biggest drivers for repowering. At the moment, I have to say, when we look into our order book, I would probably say in Germany, 10-15% of the orders are already coming from repowering. So going forward, I would probably say more as a German market in total, I would say 20%, 25% would probably need to be repowered in the next years. So that's our kind of view. Yeah.
Very interesting. Thank you. Another thing that you touched on is the very well developing service business, which on the margin side, of course, like in most businesses, very, very compelling and very interesting for you. Do you see further potential growth in that business? Are there initiatives that you could start maybe to increase the share of that business also as the installed turbines are aging? And on the other hand, is it easy for a turbine user of yours to actually use a different service provider, or are they locked in with yours?
Yeah, so very good question. So let me try to dissect them a bit. So in terms of our growth or profitability increase story, I would say 18-19% was that level of EBIT margin which Nordex historically was able to deliver on the service business. We then had some quality topics, we had some inflationary tendencies, and we dropped to 14-15% levels. But now we are fully on track, given like the efficiency measures we run in the background, the increase of the Delta platform supporting it to 18-19%. But 18-19% should not be the end of the service EBIT margin potential. Internally, we have a higher target, but I would rather first deliver on those 18-19% before we give a new target out to the market, because there is room for improvement. And why am I saying this? Is because if you compare or if you look at the industry, at other service businesses, you see that the threshold can be higher or is higher. Yeah, so that's the first statement to that. Second, the third-party service providers, it's really rare and difficult. Yes, there are some companies offering it, like Deutsche Windtechnik, for instance. But if you look at what margins and profitabilities they print, It's really low. It's lower than 10%. And I would say from a customer perspective, you typically log in with the OEM, because the OEM knows the product, they have the data, they know the predictive maintenance schedules, they know the sub and subcomponents of the turbine components, and that's how you win. And keep in mind that, like the customer, if you look at the total life cycle costs, where the customer is winning is really in the maintenance, the service, and the operation phase. This is where the customer makes the return. So therefore, I would say 95% of the projects that the turbines we sell, the customer goes with us as a service provider. In those cases where the customer doesn't go with us, that's more like we see in some regions like the US, where you have big utilities who want to insource the servicing at some point. So maybe they only sign a 3-year contract with us, or they only sign like a spare part service with Nordex. But I would say in the grand scale of things, that's really rare. But that, of course, also means for us to grow this business, it probably will only come organically. So with more or higher installed fleet, because a third-party provider doesn't deliver the profitability levels than we can have on the, I would say the organic service business.
Makes sense. Thank you. Looking into the different regions, and we have a few questions on the US, as that, of course, is one of the potential growth drivers going forward, an incremental growth driver, I should rather say. Looking into the other regions, particularly Europe, do you see demand still growing strong, or do you see it softening a bit? And within that context, what role does Germany play, since they are basically holding on to their strong commitment and growth path?
Yeah. I mean, let me then go back to this slide. I mean, on the slide, you see the forecast from Bloomberg, Wood Mackenzie, and they are forecasting that Europe, also without Germany, is expected to grow. Yeah. So that, okay, you can take it with a pinch of salt and be a bit more conservative. Fine. But overall, we believe that the growth drivers are intact. The third-party providers believe that they are intact. Yeah. And what do I refer to or mean with it? Look at the UK. They are now ambitions for onshore wind. Look at Spain, look at the Nordics, look at Baltic states. You will see that there is demand and it should deliver growth. I mean, on Germany, yes, of course, at the moment, it's true. It's a wonderful market right now because it's finally taking off. I mean, Germany always wanted to have 10 gigawatt in auctions, but we never were able to achieve that because there was a bottleneck of permits. Now, last year, when this bottleneck was eased, we already saw that last year we had 12 gigawatt of auctions. This year, 14. Right? That's fantastic. But we never expect, or we don't expect, that this will stay at 14 gigawatt of auction levels. It will go down. The question is, where will it go down to? Will it go to 10 gigawatt, or will it go down to 8 or 7, 8, 9? And we don't know yet. So I understand that from the investor's perspective, there's always a kind of the question mark on where will Germany go. But given this German monitoring report we saw 2 weeks ago, I think a bit of the uncertainty was taken away in a way that now it seems, at least from the commentary, that onshore won't see that much impacts. But I, as Nordex, would always be, let's wait and see. That's our approach. We will have clarity in autumn or latest, by year end, how the government in Germany thinks about onshore going forward. I would say that's key, right? Let's keep it, let's be conservative, What I also have to say is that keep in mind that this year, Germany already had 11 gigawatt of auctions. We will have 14 gigawatt or a bit more by year end. But what does it mean in terms of Nordex? Nordex has 1/3 of market share. Those auctions will translate into orders round about 1 year down the line. So we're talking about 26. P&L impact or visibility is then again 22 months later. So what we have now is a huge visibility into 27 already, maybe even slightly into 28. That's the biggest visibility we had, I would probably say, for years. And then the question is, what will be the new auction levels, right? And if they go to 8, 9, 10, or the installation levels, that's still massively higher than what we used to have, right? And then you will see how other markets develop. Yeah, so will there be a pickup in the UK, Spain, Ireland? Will there be a pickup in the US, North America, right? So it could even mean that we don't see a dip in terms of order intake, or at least in terms of P&L. But I don't know yet, right? I'm just telling you that at the moment, we are not too much worried about this. Let's see how this goes. Yeah.
Great, thank you. You mentioned a region that is of high interest, and there are a few questions focusing on that. That's the US, where you have growth ambitions. I think you're also ramping up production of turbines or of something. Maybe you can illustrate on that if you're still doing it, where you stand, and also how you see demand developing, especially considering that the IRA now has been around for a while, and I'm sure that a lot of projects have been permissioned. Now Trump's coming in, and there's a little bit of a wild card, to put it mildly. How does that impact your business? What does your pipeline look like? Maybe you can give us some flavor.
Yeah, sure. I think the first statement on the US is that for Nordex, we don't need a US, right? That's very important to keep in mind. So the US is not needed for achieving our medium-term targets. We regard the US as an upside, so as a kind of a safety layer for a situation where other markets may be softer. It would be nice to be in this market. Yeah, so therefore, our ambition as Nordex was not very aggressive in regards to entering the US. We said if we have 10, 15% of market share, that's fine, right? We are not aggressively targeting more. So that's the first statement. Second is, let me explain you what's currently happening. Yeah, I mean, a year ago, Nordex decided to reopen a mothballed nacelle production plant. And we decided for it because US market is expected to be a sizable market going forward. And with this plan, we would qualify for the tax credits in the US. So then with the change in election or administration, a lot of uncertainty then hit the market. And basically, there were times where everyone thought the US market is dead for wind, or it will take some time, to excitement. Yeah, it was always in between those extremes. So what we then saw is with this one big beautiful bill, which was passed in July this year, we thought, okay, it's looking good. Then 3 days after, the executive order came, where basically there was a standstill to the market. But what then happened is that the IRS guidelines came out in the second half of August. And those guidelines took now away a lot of uncertainty for our customers, because they kind of pass away that the customers can still qualify for tax credits and deliver the projects by 2030. So that's good news. I don't want to leave you with the impression that it's easy, right? It's a bit more complicated than the original safe harbor rules, but there is a path for our clients. So what we've seen since then is an acceleration in customer engagement. So now, since August, we've seen much more dialogue, much more interest, and we are in a lot of projects in discussions with the customer, helping them. So I would say there is a decent pipeline for Nordics, and but I won't communicate the pipeline because I think now we are back to what we originally thought will be our biggest hurdle, is to convince the customer that our product offering is the right one. Because keep in mind, in the US, of course, the peers, GEV investors, are probably more the preferred supplier at first, because Nordex now has to prove we have a good offering. But in a nutshell, what I want to say is that there is now an increased customer engagement. We see a pipeline. When this pipeline transforms into orders, we expect from 26 onwards into 27, 28. But it looks like that there could be a share for Nordex as well. But I won't sell you this, right? I won't marketize this. I will only talk about it once we get the orders. That's clear. But I think in comparison to where we thought we are in July and where we are now in October, 1st of October, there has been an improvement. And now it's again to our people on the ground to convince the customer, to help them to qualify for tax credits and to make it happen. So there could be a potential for Nordex, but as of today, I won't sell you this. Yeah, that's our view.
So you see a revival in the overall market,
Yeah.
and you see inroads for you to tackle a part of that market, basically.
Exactly.
Okay, great.
And now
Super.
let's make the rubber hit the road, right? Let's show you only orders when we get them, and not talk about pipeline or conditional orders. Let's hopefully deliver something starting next year. Yeah.
Great. Looking into the future, your medium-term EBITDA margin target is 8%. And of course, with the strong development that you've already shown in the first half of this year, people tend to get a little greedy and ahead of themselves. So obviously, and that's a question that I would ask as well, medium term is a rather vague term. Is it something that you would already envision for 2026 or rather 2027? And you've already partially answered that question for the service business. The 8% does not seem to be the high bar of guidance, meaning that if things go well for you, there could potentially be additional upside. I'm saying it, but it's actually a question, so I should word it differently. There could be potential upside, couldn't there?
Mm-hmm. Yeah, let me answer the first part on the timing. I mean, when I gave you this bridge in the presentation, oh no, 1 second, it's here. I basically already alluded to the fact that it's a question of more of timing. I mean, we haven't specified in which year we expect this 8% to be materializing, because it depends on when you get the volume, the additional volume we need for it. When is the timing of the delivery? Like, how is your master schedule, the production looking like? When can it hit the P&L, right?
Yeah.
So, and therefore it all depends on this year, how we close the year, what is the order intake, what is the timing of the order intake, is the service on track? And then we can be a bit more precise. Yeah, so it's more on this side, that's the question. So it could be 26, yeah. Our CEO, Jose Luis Blanco, mentioned this in one of the calls, but it could also be 27, right? It's more on a ramp up and a timing perspective. And of course, it's still, now 6 months to go for the closing of the year, right? So that's what we are working on. And that also brings me to your second part of the question, Holger. Yes, I understand 8% has been promised or has been out there for quite some time. Yeah, and everyone tells us, okay, can this be enough for such a business? And probably it's not enough, right? Because we haven't even talked about self-help measures from the bottom line, like from the structural perspective, what Nordics could do. But I also want to be a bit like humble, right? Let's first get there, and then let's see what we can deliver. Because in this industry, and unfortunately this industry has been cyclical in the past, right? So maybe maybe we should come out with a target of saying, what is the floor, right? I mean, what is that, what we can deliver or should be able to deliver in most of the times, even if we have more headwinds, or give you a corridor, right? But I think it's too early. Let's first deliver on 8%, because looking at the last 10 years, Nordex has never achieved 8%. Yeah, let's go there and then think about what is maybe the floor, even if the cycle turns in the other direction. And then let's talk about what could be the potential. But gentlemen and ladies, just stay with me now first in delivering 8%. And then let's see.
I understand you want to not fall in the trap of over-promising and under-delivering, which is
Yes.
understandable.
Yes, exactly.
Coming to the last question, which are actually two questions, but I'll put them together. Looking at the competition, you've already mentioned a few names in the US market and of course in the European market. What's the Asian, in particular Chinese competition like? Is it something that is gaining strength, that is becoming a household name to some markets? What are the exports like? What do you see?
I mean, with the Chinese competition, we see in some of our countries, and especially or in particular in countries like Latin, South America, South Africa, in those areas, where basically the only decisive factor for winning a contract is the price. In other markets, like in North America, there will never be an inroad for Chinese. In markets like Europe, I think the entry hurdles are still quite high. And what I mean with that is that in Europe, it's a different approach of how you make the business, how customers decide. Yeah, it's a lot about the service. It's about the life cycle costs approach, where for this, the pure capex investment upfront is only 1/3 of your whole life cycle costs. And I would say, so far so good. We don't see an increase in Chinese competition in major markets. What I have to say though is that I believe that for the industry, the biggest challenge long term is the Chinese competition. Yeah, so everything we as Nordex do needs to reflect on that. That's why I showed you the slide on our supply chain footprint. That's why everything we need to do is keep them or look at them seriously, right? I would say the problem is that there will always be a lot of noise on the Chinese. Yeah, they're really good in addressing, so to say, making big noise on press releases, but always read behind the lines. If they won an order, what order they won? Maybe there's no grid connection, no service, it's self-maintained, it's not even through the auction, right? So what I'm saying is that if you asked me a year ago compared to today, I don't see any change in the dynamics. Hopefully a year down the line, it will be the same. Yeah, but frankly, I can't take away this uncertainty completely, because either the Chinese are there or they're not. There could be one way where maybe the European government decides to impose some local content rules. Then I think there would be a clear answer. But if that's not happening, then I think there will always be the situation where we have to give our best to keep them out. And I have to say, if you really look at this argument of the pricing, yeah, I can tell you from a end customer perspective, we did the math, and also I think it should be clear to everyone that there is only a marginal, maybe 1-2 basis points advantage for the end customer if the supply chain would move from Western OEMs to Chinese OEMs. And then you would have all those discussions on security of supply, and so on. So as of today, no change compared to a year ago, but we take them seriously. Let's put it that way. Yeah.
Super, thank you. I think this concludes the Q&A session.
Thank you.
I wish you the best of luck for the
Mm-hmm.
remaining. Well, actually, they're 1 quarter remaining, but for the numbers for the third and for the fourth quarter.
Mm-hmm.
Thanks for all the insights that you shared. Great growth, I think, very good perspectives. And once again, you can find the research on Nordex on Research Hub. To those of you dialing in from Germany, I wish you a great long weekend. There's 1 more day to go, and then you have a 3-day weekend ahead of you. And Anja, thanks a lot for spending the time with us and illustrating your investment case. And of course, thanks to you all for attending and also for the great questions that you posed.
Mm-hmm.
Appreciate it.
Thanks
Thank you
for
very
having
much.
me. Take care, all. Bye.
Bye.